With uncertainty in the market like we're facing right now, you have the Russia and Ukraine conflict. You also have the rising inflation rates. And then, of course, interest rates to lower those interest rates. And then we also have COVID. This can cause a lot of fear in the market, which causes a lot of people to sit on the sidelines. And that's exactly the opposite of what you want to be doing. So the purpose of this video is to talk about events in history, mostly conflicts around the globe. I do have a chart I'm going to share here in a second that goes back to World War II. Now, keep in mind, this is not every single event or conflict around the globe. This is somebody posted something on Twitter, and I simply grabbed it was a JPEG image. And I just, I turned that into a chart that's a little easier to read. So let's take a closer look. If you go to our blog section, Education, Investing, you will see a series of articles. This one is called the Geopolitical Events in the Stock Market. So let's take a closer look. And what this chart does is it highlights events and how long they went down and how many days to the bottom, and of course, how many days to recover. Now, keep in mind, this is not downplaying how tragic each event is. It's just a way to give you context and a little perspective on how far the market really does fall when there are conflicts. So let's dive in. What it does is it's listing these events from the most recent to all the way back to World War II. So looking at the first one, we're not going to go through everyone, but the first one is U.S. pulls out of Afghanistan. This was August of 2021. The market went down 0.1%. 1 day to the bottom, 3 days to recover. Next up, Iranian general killed in airstrike. This was 2020. Market went down 0.7%. 1 day to the bottom, 5 days to recover. If we keep going here, bombing of Syria, this is 2017. Market went down just over 1%, 7 days to the bottom and 18 days to recover. Boston Marathon in 2013, market went down 3%, 4 days to the bottom, 15 days to recover. Let's touch on the Madrid bombing. This is 2004. Market went down almost 3%, 14 days to the bottom and 20 days to recover. Now we're going back to 2001. This is 9/11. Market went down almost 12%, 11 days to the bottom, 31 days to recover. I was a little shocked by that when I saw this. I thought that made a bigger impact at that time. Then we go back to 1990, Persian Gulf War. Market went down 16%, 71 days to the bottom and 189 days to recover. So this was longer than most of these. I think this is the second longest event to World War II, which we'll touch on in a second. But as you can see, most of these events are shorter than we think. And this is what usually happens in the stock market is when fear comes into play, it doesn't last as long as we think. Like, for example, the recession of 2008, people feel like it lasted years. When you really look at it, the market went down 38% in 2008, but in 2009, the market went up 24%. And if you held good businesses at the time, you made a lot more than 24% that year, 2009. But anyway, let's keep going. Here's one that was shocking. Ronald Reagan, 1981, he was shot in the arm. Market went down 0.3% for 1 day, took 2 days to recover. I was surprised by that. And speaking of US presidents, we go back to the John F. Kennedy assassination of 1963. Market went down almost 3% for 1 day down and 1 day to recover. I was, again, shocked by that. I figured that would have been a little longer. Cuban Missile Crisis, 1962. Market went down went down 6%. 8 days to the bottom, 18 days to recover. And then we go back to, you can see here, North Korea invades South Korea in 1950. Market went down 12%, 23 days to the bottom, 82 days to recover. And then the big one here is World War II. This is Pearl Harbor in 1941. Market went down 19% over 143 days. It took almost a year, 307 days to recover. The beginning of World War II was, I believe that was September of 1939. The market did not actually go down at that time. So it was Pearl Harbor that really took the market down at that point. But overall, What we're dealing with right now, I know is scary. There's a lot of uncertainty, and I'm getting a lot of emails from investors, asking if they should stay in cash. And my response to that is you want to look at good businesses that are probably going to sustain over the long term. I know what's going on with the war. There's a lot of impacts to different supply chains, and of course, steel, materials, things that are manufactured or made in Russia. There's an impact there. But with me, those of you who see my portfolio is primarily tech. So of course, at times like this, I absolutely do not sit on the sidelines. This is the time to stockpile. This is the time to get in. So if you're wondering when, this is a great time to get into the markets. And even if you pay attention to some analysts, especially those on Motley Fool and CNBC, they will agree with this. They are buying a lot of stocks right now. So again, if you're fearful, don't worry. Events like this aren't going to sustain forever. Now is the time to get into the market.